Hello, this is Cryptolyze. I hope you are well this Wednesday, 25 October 2023. It is with pleasure that we meet today to talk about crypto, to talk about BTC, to talk about what happened the day before yesterday, and to understand a little bit about the movements, the manipulations that we can have at the moment, especially in terms of news, and how complicated it is to deal with it emotionally. We're going to talk about all that, and it'll start right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will already remind you that we had a very strong acceleration on Monday morning with the hype that was building around BlackRock, which was also more or less validated by the registration of the ticker, which is the representation of the ETF BlackRock spot within the institute that takes care of this. And what's interesting to see is that then it was removed to be re-registered. And there we are, really in a game of emotions, which is very complicated to manage because it is the same principle. We tell ourselves that it will be validated, that it is being validated, that the ticker appears, so we tell ourselves that it will really be validated soon. It is withdrawn at this time perhaps that there was a problem, and it was postponed afterwards. We are really in a game in which emotion, when we are on pure news like that, we are going to be under a form of roller coaster in which we will have to accept what is happening and take the time, and you will see in terms of the technical part we will come back to this whole part. And we also have elements which indicate to us that potentially we would be in a diagram more like 2015 than 2019. We will see that in the technical part. But what is important to keep in mind is that when you have news manipulation, there is a good chance of price manipulation as well. And there are elements that are important too, which is that RK Invest, so a very large VC, a very large capital, which is in the process of selling parts of Coinbase, is behind shares of GBTC, in which there is significant profit taking place. And what is interesting to see is that Coinbase's shares are relatively flat. There has been no increase, whereas in fact we are supposed to have a correlation between BTC and Coinbase. Namely, Coinbase owns a lot of BTC for its clients. We are talking about more than 6 lakh BTC, if only for Grayscale Capital. So when we add the rest, it becomes one of the biggest holders of BTC, even if it is not its own. That does not prevent that it is highly valued compared to what it holds and the income it generates in relation to its holdings. And there we see a Coinbase which remains completely flat. It's true that there is the problem of SEC prosecutions. We know that the SEC has been against Coinbase for some time already, and it continues and increases. We can clearly see the discussions that are taking place between the two entities where it is complicated, and Coinbase, which is used to set up the ETFs of the different players, whether BlackRock, Fidelity, etc. So we have Coinbase, which is a bit between two chairs currently. Is this enough to maintain separates at a relatively high level? Flat, while we have a BTC which is more 4,000, more 5,000. I want to tell you, not necessarily, it's that we also have sales, and it's not for nothing. It's because we also have big sales that are being made. We have ARK Invest. We have the information. I think that it is not just ARK Invest, and that there is pressure being put in place with profit-taking, a form of exit which is being carried out. That is why I'm telling you that you have to be very careful. When we have this type of news in which we are trying to create FOMO, clearly we know that crypto is waiting for ETFs. Personally, I expect them very strongly for an injection of liquidity. Do I consider that it will be when the ETF arrives that we will have the liquidity injection? You already have my vision in Saturday's video, so I'll put the link at the end of this video if you're interested in watching. But now, I think we'll have to be a little more patient with this and, above all, protect ourselves from possible price manipulation. Another point that is interesting is Fireblock. Fireblock, which is one of the institutions specialized in the custody of cryptos. So it's the act of providing a service to be able to keep the cryptos of large institutions, large banks, or large funds. And it is generally the reference. Clearly it is the big reference. And what is good is that generally they are interfaced with decentralized finance, except that they announce that they will help develop a blockchain that would be compliant. And that implies that we are in the process of distorting the notion of blockchain. The the notion of permissionless and decentralized, because overall these 2 points really have the notion of a blockchain, the construction of a blockchain, that would disappear to be compliant. So, I don't know exactly what product will come out of it, but it will be interesting if they manage to keep these components while being compliant, or at least getting as close as possible to compliant. At that point, we'll be in something that will be interesting to watch, to see if it's possible or not. Personally, I have doubts. We are moving forward with the macro in which we have the October PMI, which is positive. We have returned above 50, which is positive. We are even above the previous month, so we have a good economy which is relatively strong. And relatively is not necessarily the right term when we look at what is coming out in terms of results. Isn't there something that shocks you? Really, take a closer look. Isn't there something that shocks you? Well, yes, everything is green almost. We see Microsoft, Alphabet, we see Visa, Coca-Cola, everything is green. That is to say that everything is above the forecasts that were given. And here it's really important to note that everything is green. Really, everything is green. I think we are going to be in a year in which we had forecasted. When I say we mean all the analysts who are specialized in stocks, I don't necessarily count myself in that. We had forecast a real reduction in income and turnover. For the main companies of the SP 500 and the NASDAQ, and mainly the Big Five, therefore which are the 5 biggest, this is not the case and we are well above it. For example, on Alphabet, we are at 1.55 B dollar versus 1.45 B dollar, which was defined in EPS. So we have performances in action that are above expectations. So we are in an overvaluation, and what is really interesting is that we have all the elements which tell us that overall the stock market, the pure structural market of the economy, which is pushed by the Big Five, and we are going to say the NASDAQ in general, a technological part which is relatively strong, that everything is going well and everything is pushing hard enough to continue moving forward, and therefore in terms of macro we find ourselves a little in between. For what? Because we have good news is bad news. In the sense that if stocks and therefore companies hold up, if the economy holds up, well, that means we can stay longer at high rates. This also means that we can potentially raise rates again, because the economy is holding up. And clearly, Jerome Powell in his last speech explained that he was surprised by this resilience, and the term surprised is not insignificant in the mouth of the director of the Fed. It is really important, and therefore we have something which should have been such a very strong acceleration because we have a large valuation in particular on NASDAQ, which was carried out on tech stocks. We see that we have something which is rather timid in terms of breathing. I think that the rest of the results will always be above. We will not have too many surprises. Or at least perhaps one little surprise, which would remain consistent with a form of breathing or a form of ranging at the level of the SP 500, something that works like that, or an acceleration to go and do our test. But I don't see what could give this acceleration, at least as it stands. Perhaps the speech by Jerome Powell that we will have today at 22:35, in which we could indeed have something which is rather positive, a little more mea culpa than the previous one, and a little less surprised precisely. A little more in control, which is precisely what we would expect from someone like the chairman of the Fed. In terms of oil, we see that we continue our decline. Very important. We did the first day. The second day validates this bearish continuity. What is interesting to see is that we still have this divergence which is very present. We will have to see whether we break the 80 or not. If we break the 80, it will be positive. That means that we are potentially invalidating the upward acceleration. That implies that we is doing a range re-entry here, so we're going to wait for a breakout, a retest, and a bearish continuation. And at that point, we're going to retest the 75, and we'll stay between 75 and 85, I think, for a while. That's where it's going to play out, okay? It's really going to play out there, so overall this week we will have this information with a weekly closing. Is the weekly close below this lot? Well, at that point, we will really have this bearish dynamic, which could be triggered with potentially even a distribution where we would have a decline ARST SOW. UTAD, okay, the UT a little higher hop. We make the little hat to complete, in which we would have the bullish divergence which will be put in place. To make the UTAD, 95, 100, we break. And there, on the other hand, we break bearish, in which we do a retest. We do an LPSI. And then we sink to look lower. Well, we are still very far away. So we will follow what is happening, particularly in terms of oil, and especially on this very weekly closing. Important. In terms of BTC hop here on dominance, we are still on a good path. 54%, okay? So we have, despite the fact that we have a BTC which has started to breathe, we have a dominance which is maintained. This implies that the BTC decreases less quickly than the acts which have grown. And therefore we have, well, a bullish continuation of the dominance of BTC, and I think that we will have to monitor in this week, the month which comes mainly to see if we really manage to touch the 58%, and on that, we would perhaps be in this upward acceleration dynamic here, which was at the end of 2018, to then have a lateralization and have a second phase of relatively significant acceleration, which would be interesting to monitor for after having this breathing phase and liquidity transit to go to altcoins. In terms of BTC, we therefore had this big acceleration at the start of the week in which we went to fill the CME gap. We made the take profit. We went into a salt reloading zone, which is rather classic. Now, what do? On this, I will offer you several thoughts. The first will be a perspective of where we are in relation to the different cycles. There are several ways to do it. I like to do it through graphs like this. And I have already told you about this person who is clearly worth following because he has graph representations, which are always very interesting. So it's the rational route, if you're interested on Twitter, in which, here he posted, it's October 19. We hadn't done the push yet. But it's interesting to follow, in which he had defined in pink red, we have 2023. 2019, we have 2015 here, so we really have the last three sites which are present, with the halving 2, 3, 4, which are also ruled in terms of date, to give us this representation. And what is interesting to see is that in relation to the evolution, we see that we are not really in the image of a 2019, but much more of a 2017. In 2017, we had this big acceleration in which we had a first acceleration, a retest, and a second acceleration before having a delay, and to have after the start of the bull run which was set up. So here we are going to ask ourselves the question, are we really like 2017? That's simple. We're going to look in logarithmic terms, yes or no, in 2017 we were in that way. And what's interesting to see is that in 2017 we had a leg which still very much resembles what we have. We had the implementation of a pattern which was a range, in which we left the range with a very strong, powerful acceleration. Then we went to retest the top of the range. Because the top of the range was in this area, the top of the range is indeed present there. And so we did a retest of the range to then have a confirmation of the acceleration, a contraction, which was a form of betting in place of ranging/compression of the liquidity, and then a break of the new range and the new compression which was carried out, retest, and then we were gone. And so we still have these patterns. And does that represent what we are having? I want to tell you that yes, in fact, it still looks quite similar in the sense that we have been in a form of range already for some time between 31,000 and 25,000, in which we had a first break, first retest, second retest with a liquidity gain, with a delay which still lasted relatively long. How long did it last anyway? I don't even remember it anymore. It had lasted 22 days. 22 days timeout on 1, 2, 3, 4 liquidity shots all the same. It was relatively strong emotionally to manage that part. In which then we retested the lower part, and what do we do there? A break of the range in which we have a very strong acceleration. And therefore, if we based ourselves on 2015 once again, we pay attention to fractality. Because it is not because it happened like that the last time that will happen in this way, but nevertheless it is consistent with what we are used to technically looking for, which is to look for a retest of the top of the range to tell ourselves that here we are in the process of, to retest, okay, we do a pullback, and at that point we will validate this bullish break by making a break of structure here and therefore there. We could have the establishment of a contraction, of a compression, until the halving before subsequently having a bullish break as we were able to have in 2015. So we are in this process where, yes, we still have a lot of elements that are being put in place to say that we are like 2015 and not the rest. When we are short-term, we still have several things. First, we are going to have here the establishment of a bull flag, clearly in which we could have an upward continuity, which is in the process of being put in place. But the bull flag can last for a long time. I means we can have something that does like that, slowly dying, especially since we have a large part of imbalance, which is located here. We have our order block, which is located there. So overall, it would be logical to go deeper to retest, especially since we could also have a BC, Arkansas, ST, SOW, Utah, UTAD. The distribution will retest. We do an accumulation and we leave. That's it. What? This is a classic reaccumulation in which we will reaccumulate liquidity to then be able to leave, and we can have an accumulation phase which can be relatively long. It can be a form of lateralization before having a bullish break, and we can even have elements, which are even worse. These are forms of manipulation where we could break here, lower, pretend to have a reintegration. We do a new reintegration outside the range, we retest, and we start again, in which we could have the accumulation before, behind a spring which will seek the liquidity below. We will seek the liquidity above. we retest and we start again. There we could really have this type of manipulation. And why am I telling you this? Because overall, when we come back to the news, we are clearly waiting for strong news that has not yet arrived. We always have the beginnings of fake news. We are actually starting to have a very strong rise in rumors and a false word which is done in relation to this rise of rumors. That's really classic manipulation of news. There is also manipulation of liquidity, and that's why I'm telling you that you have to be very careful. In any case, what is important in relation to this is that we had an increase in volatility. This is something that we expected in terms of BTC. A BTC that is dead, in which we find ourselves with volatilities like we were able to have this drop in volatility here, is not something that is attractive, whether it is even on trading, whether it is even on a type of asset which is ultra risky. Basically, we are going to look for volatility to be able to trade, going to have performance. In this case, we start to have volatility again, so we start to have attractiveness again. Relatively strong, which is positive. In terms of the heat map and liquidity, what do we see? We see that in fact we are in a form of compression. We are recreating higher and lower liquidity to be able to revitalize the movement. We have good. Here we are just going to go back to 1 week so that you can clearly see the bullish break that we were able to have. It always takes a little bit of time, but in which we did have here the bullish break which was effective. And we see that we have, well, our order block there, we do not yet have many liquidates which have been formed. The liquidated ones are below, but obviously are in the 30,000 bar. But it would also be logical to have this rotas, and then after having a trap on the 30,000, reintegrate above, consolidate and leave, which I presented to you earlier. I think that it is a little too early to look at liquidity. We have short-term liquidity to make small intrinsic movements, but in any case, it is still quite low. In terms of order flow, it hasn't changed too much. We can clearly see that we are in a consolidation phase. We have no hedging in place. We have no open interest who is working. I think that it is as usual. We are in a phase of acceptance of what happened, and it's as usual. We could have a few days which are like that, like in this acceleration here, same principle in this zone there, hoping that we will not stay 20 days in a form of lateralization hereby. Against it will be a little complicated to manage. And I think that the market is not ready to accept that, especially given the FOMO that is happening. So either we will have a once again bullish break with a real validation of this FOMO, either next to the bellows, which falls, and therefore this retest which we will expect during this month. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy. And we meet at 13:30 to talk about NIR, and besides, I'm going to ask you to vote for tomorrow's 13:30 video based on the cryptos that are present in front of you here on this list. Select. I will take the crypto that was voted the most in the comments to deal with it tomorrow.